Let cash accumulate over days and chase that check for days. Let cash accumulate over days and chase that check for days. Let cash accumulate over days and chase that check for days. Let cash accumulate over days and chase that check for days. Let cash accumulate over days and chase that check for days. Let cash accumulate over days and chase that check for days.
Greetings, ladies and gentlemen. What's up? I hope you had a wonderful day. I hope you're having a wonderful evening. But this is the recap with Let Cash Accumulate Over Days. This is recap coverage from the stock and crypto market. These are live ideas of thought and studies. This is not financial advice on this stream or with this company. With that being said, let's get straight into what happened today, man. Wow, we had a eventful day today, man. A lot of volatility, as I told y'all, was coming, and this could be more. It's just a start here. But the S&P 500 closes 1% lower Tuesday as debt ceiling talks drag on in Washington. The S&P 500 dropped 1.12% to settle at 4,145.58, while the NASDAQ composite pulled back 1.26% to close at 12,560.25. The Dow Jones Industrial Average lost 231.7 points, or 0.69%, to finish at 33,055.51 points. So, man, wow, what a pullback that was today. That was kind of like, you've seen how the market went up on that Thursday. To the downside today, we kind of got like, that's what that was. But to the downside today, we kind of got that that play in of, no deal. So you got to see both sides really today. Where last week got to see one side that the deal might get approved. If it was to get approved, you seen how the market was going up, and then today you got to see if the deal doesn't get approved. You've seen how the market is going to slide to the downside and just continue, and you'll see that continuation to the downside if there is no deal by June 1st. So keep that in mind. It's real big right now on Wall Street, as I told you. Some people are trying to nudge that off like it's not important. They may know something you don't, but at the end of the day, as of right now, all eyes are on that debt ceiling deal, and it is very important here, considering that, the United States, we could run out of money, and it's very key. We run out of money, what are we going to do next, So we're going to see what's going on with that, and obviously that's a huge factor. As you can see, the market kind of pulled back today. I would almost say I would say the Bulls lost momentum today. I would still say we're in a bull market though. They lost full momentum today. I must admit that we're to the point where if we can get a couple other indices, the SPY is kind of technically bearish now, looking at it where it's at. But it's on the brink. It's on the breach. It's on the edge of being bullish as well. So it's kind of playing both sides right now. But overall, the Bulls did lose momentum today, you guys. We're still in the bull market. Until you can see further selling, there we're not back in the bear market. So that's just the key right now, just to see if things are going to continue to go to the downside, or things are going to continue to slide to the downside, or if there's any more panicking about the debt ceiling deal. Now, I do think, and overall at the end of this, I believe here, a lot of people are used to this. I was talking to someone today, they was like, this stuff has been happening for years and years to come. And usually most presidents just sign a deal for the debt ceiling. So I'm expecting the deal to get done now. I am kind of bullish on that. I'm thinking the market is going to bounce and recover here from where it was at. It was just really, it was time for that pullback. It was ultimately time for the market must be fair, so it has to play both sides, and that's just kind of what it did. And at the end of the day, like I said, we're still in the bull market right now currently, and unless you can see tomorrow, like the other indices start to sell off a little bit more. As of right now, the only thing's kind of bearish at this point. It's technically the SPY and kinda the IWM. They're the only ones really indicating that that the market is possibly bearish. And well, IWM is really actually holding up as support, so it's not really that bearish, but it's holding up as support. And I just think, like I said, we're still in the bull market. It's just this was a back test that it was time for it. People knew it was coming. Like I said, the market doesn't go straight up. We all knew that. So the market doesn't go straight down either. We all know that. So end of the day, like I said, I just think we're still in the bull market overall. Um, the spot may be a little bearish here right now, but like I said, the Dow Jones is actually a little bearish too right now. So I think the main sector will be the triple Qs. If you see that start to sell a little bit more, then you can say the market will be flipped back to a bear market. But after today, I'm not going to give the market back to the bears that sudden after today. That would be panicking. So, and this market, you don't want to panic in this market. You just want to kind of let things play out and see how they are. Obviously, it's about fairness in this market. So, like I said, still the Bulls lost momentum. Definitely today, they lost momentum. We're still in a bull market. The Bears got momentum right now. That's what's going on. So that's the key to be going into tomorrow and seeing how things going to play out and seeing if the Bulls will get that momentum back. But that's pretty much what happened. Fed speakers. Tuesday, Logan said something in the pre-market. You see, had a little bit of effect today. The market kind of got bearish. It was a lot of negativity going on with debt ceiling and a lot of stuff surrounding it. A bunch of earnings came out too, kind of pulled the market down. AutoZone, you guys, wow. Remember I told you yesterday on the recap they were doing that, and hit the like and subscribe button. But I told you yesterday that they were going to make a 100-point move, and they did. They went down $100, and that kind of dragged the market down today as well. AutoZone earnings was crazy this morning. But that it paid. It did pay. So to the downside, but that's just what it is. And we got a couple names that reported after the bell. We'll be looking at them here shortly. And the video coming up tomorrow after the bell, you guys, it's going to be very, very key. From my understanding, the video it's about to move. It's about to move to the highs of 330 plus, or it can really just go back below 300, back to 290, maybe 289. So just keep your eye out on the video earnings tomorrow, you guys. That's kind of really what it is. That's all eyes on the video and all eyes on Snowflake too. Don't forget about Snowflake. That'll be a very important earnings report. Then we got Best Buy and Dollar General coming up Thursday morning, so we'll be looking out for that as well. Economic data this week, you see FOMC minutes tomorrow, you guys. Very important piece of data there. We'll see if anything's changed in the minutes that's coming out tomorrow. It usually come out around 2 p.m. FOMC minutes tomorrow usually is around 2 p.m. So we'll see what happens at 2 p.m., what the market does, or even before or after 2 p.m. So we'll be looking at the time and looking at the data coming out Wednesday, FOMC minutes. GDP, Q1 GDP on Thursday, that's going to be very important as well, you guys. So the market's still waiting on some important economic data before it can really make a move. Today was kind of the start of something, but things can flip and turn and go the other way if they want to. Looking at the data, how it will be played, or you'll continue to see more selling as you did today. So looking at how the data will be played the rest of the week is going to be key, you guys. Pitting the home sales on Thursday as well. And core PCE price index on Friday, you guys. That's the key data to be looking out for this week. 5 things to know. Still, debt ceiling drama is still escalating. As you can see, it got a little worrisome today. The market panicked and, they lost 1%. If it panics tomorrow, it might lose another 1%. If it panics in there, you see what I'm saying? Now we're down 3% here. So you got to be looking at this. It's drama, and the drama is kicking on, and we get a deal. That 1% might recover and go back up 1% plus 1%. You never know. We're just looking out for this thing to make a move and get settled. The market is. We know the market never gets settled, but it's a timing thing here. It's time in the market. Obviously, is what makes it settling, and you start to understand it better. But the Fed meeting minutes, U.S. PCE inflation data. Earnings, you guys, cost of lows, all that. Best Buy, Nvidia, like I said, Snow, and PANW, they reported after the bell. We're going to be looking at them here momentarily. But that's pretty much it. That's the things you need to know and be on for real this week. And they're saying on Wall Street, buy Dick's Sporting Goods. About to check that. Sell Nvidia. That's what they're saying on Wall Street. We're going to see. About to check that here momentarily. That's pretty much it, though. Let's go ahead and get straight into the charts and numbers like we like to do. You did. We're moving on to the timely schedule today. I like that. So, looking at the SPY first, you guys. You know that's what we start off with. We always start off with the SPY here, LCAOD. And now you guys kind of get a visual of what I mean by the SPY. The Bulls lost momentum today. You know, they lost momentum. The Bulls lost momentum. The Bears got momentum. We're still in the bull market. You know, looking at the numbers on the board here. 414, that's still bullish technically. Still bull market area is technically the start of it. So right here, like I said, it can flip from here. You know, if you see this trend line, if you see this SPY break below this trend line tomorrow, then that's when now you can start to think, okay, all right, the market might be flipping back bearish for real that quick. We were just peaking. That's all it was. The market was at peak season, and up here when the SPY the past 5 days has been up here at these highs, it's really just peaking. You know, that's really kind of what's just going on. The market is just peaking. You know, and the market has peaked. And like I said, if we see more downside tomorrow, you can obviously start to say that the market just peaked and we're going back bearish, you guys. The market's going to flip back to the bears. As of right now, like I said, bears got a lot of momentum. They can easily do that tomorrow with a flush. We'll be looking out for it closely. But as of right now, still bullish here. Looking from the 1 month out perspective, you know, it did just make this move, and you know, obviously that was the first time it hit these levels. So now, you know, this could be an area right here. This is where it broke out. It's right here at where it broke out at again. It could retest the highs again, you guys, right here. It can make another round trip to the upside here easily. And like I said, that's just what you got to really be looking out for now. Is the market still bullish? Is the Bulls going to get their momentum back right now overall? That's just the key thing to be looking out for right now. On the SPY especially, since they kind of did, you know, pull back to levels right here where the Bears feel comfortable again. You know, like I said, they're in the comfort zone right here. They're back in the house near the door. So, you know, the Bears, like I said, they got that momentum as of right now currently. But from the 1 day perspective to the upside tomorrow on the SPY, I am looking for a upside level there to retest 416 on the SPY. If you can get there, that shows strength that, you know, we're still in a bull market and the Bulls are getting their momentum back slowly but surely. And if they really hold that level and push above there, the next level is 417.30. So that's what I'm expecting the Bulls to try to do tomorrow with the FOMC minutes coming out. Looking at the data there closely. And like I said, at least those levels can be fine for now. And obviously 420 and 420, 419, 419, 420 will be a target again, obviously, to get to. It's looking like those levels will come into play if you get a debt ceiling deal. So that's what we're looking for overall on the upside. Again, back to the SPY, but to the downside, you know, technically the top has been put in. Looking at this here from the process it was just made from the past 5 days, the top has definitely been keyed in here. You got a double top 420. So as right now the top is in. So more downside levels tomorrow I'm looking out for now. If the SPY really want to flip back bearish and the Bears want to really gain back the market access to the downside, I'm looking for a break below 413.40. If that doesn't hold, you guys, the next level not to hold should be 412. If 412 doesn't hold, you guys, the SPY is coming all the way back down. The critical support is here at about 410, 410.50. I can see consolidation there, and like I said, that's critical support there. Remember that 410 level can turn into resistance as well. So it's either support or resistance there, but that's the downside levels I'm looking for on the SPY here by the end of the week, possibly next week, next month. Triple Qs. The triple Qs. So like I said, man, this is triple Qs is the reason why we're still overall in a triple Qs is the reason overall why we're still in bull market, but the Bears got momentum. But the triple Qs is the reason why we're overall still in a bull market right now currently. So you know, they're still high on the board. $333 on the triple Qs, 9%. That's pretty big. That's a still bullish level there. Obviously, it was time for that pullback. The top is in, like I said, just like on the SPY. Triple Q is the same. Top is in, 338. So it didn't test that 340 level that it wanted to make. It got exhausted. Price price exhaustion, it looks like, and it just got overbought, and it looks like, it'll be a goal to get back to 340 now, looking at it long here, but a pullback did happen here. So now, like I said, to get the market back bearish, the triple Qs, they want to see more downside, obviously, but to get the Bulls to get their momentum back at least tomorrow to the upside. I'm expecting the triple Qs to break back above 335 there. You get back above that level. The next level to get back towards is about 336.20. And like I said, you reclaim that level right there. That will give you the bull momentum back at least, and it'll maintain that we're still overall in a bull market. And it's nothing you can do about it. Numbers don't lie, charts don't lie. People talk their feelings all day, but numbers and charts don't lie, and it is what it is. So that's just what we're looking at right now. 336.60 to the upside. Must break above 335 first to show that you're bullish, and that's the levels we're looking out for the upside. To the downside, though, I am looking out for the bears to continue this momentum. I am expecting the bears to continue this momentum, and like I said, if they want this market control back, they'll be flushing this triple Qs down here below tomorrow, 332.20. Next level for that not to hold, if it doesn't hold, is 331. If that doesn't hold, you're going to be looking at the triple Qs right here at 330, you guys. And now we can say the market is getting to the point where it's almost back bearish. You get what I'm saying? The bears will have full momentum at that point if it does fall that much to the downside. And like I said, you'll be getting to the point where the market is flipping back bearish if you see the triple Qs break below 330, you guys. So be on the lookout for these levels because it's really getting real here and it's getting critical. So if the triple Qs below 330, next level to be looking out for is about 328 to 327, and that'll be full bear market again. Currently at that level on the triple Qs. Like I said, it'll still be good for them, but that'll be a nice little pullback to see if it's actually going to retest that high of 338. So that's the levels I'm looking out for tomorrow right now on the triple Qs, and going on next week, next month. You know how it goes. DIA, the DIA, you guys. The DIA. So where we heading here? Looks like the triple Qs is starting to match up with the DIA. Is catching up. They both went down today. The Dow kind of held up right here at critical support, 330. They know this is the last leg of support for them. So they were already right there at their bearish stand. If they break below tomorrow, obviously the market is, the Dow is bearish for sure if they break below this level tomorrow. But definitely, like I said, it looks like the triple Qs and the DIA is starting to match up again. You might see, like I said, the triple Qs sell lower than the DIA, and the DIA hold up this level and actually go up tomorrow. So be on the lookout for that flip-flop on the triple Qs and the Dow Jones trading share prices there. They might be at 333. The triple Qs might be at 330. You never know. It might be a flip-flopping thing. You might see more selling. You might see more downside on the DIA and the triple Qs even going even lower. So just be on the lookout how that correlation is playing out. Right now I'm seeing it looks like the triple Qs is still ahead of the Dow, which isn't making quite that much sense right now. So we're just looking out for the correction there in the Dow Jones and the triple Qs there to see which one is going to actually be the leader and which one's going to be the lagger. So that's what we're looking at right now closely for those two. But the DIA, like I said, right here at 331, they closed. So the levels I'm looking out for tomorrow to the upside, it must break back to 332.30, 332.70. You get to that point, you need to really push to 334 if you're bullish on the Dow Jones right now. I don't know what they got going on, but you need to be getting back to the upside. If you're bullish, or if you're bullish with the overall market, or if the market is going up, you would definitely want the Dow Jones back above these levels to the upside. So that's what I'm looking out for here, a break above 331.80, and as you get there, I'm looking for 330.260, and then after that, I'm looking for about 333.50 to 334 to the upside on the DIA. Now to the downside, like I said, this past 5 days, you can see we're right here at it. This is critical support here. If this doesn't hold, the Dow Jones will be extremely bearish looking 1 month out here. And then we could be retesting this low of 328. It could be possibly in play. We're right here at the bottom sitting in the cut. It could be about to flush. We're right here at the brink of it. So it's going one way or the other here at this point. But to the downside, I'm looking for a 330 break. If that doesn't hold, then I already know it's probably going to lead us to about 328.60 to the downside on the DIA, you guys. IWM. The IWM, you guys, still remaining its gains holding up. It tagged 180. It hit 180 today, you guys. Did y'all see that? The IWM hit 180 finally. You can check off their goal. That's what they've been trying to do for the longest. You can check that off. So they there. You feel me? They there. Boom. They there. At the end of the day, now that they're there, the whole key is to see now that they're there is are they going to retest it? Because as you've seen, it was a straight rejection to that point. When they hit 180, they got rejected. And it closed right here at a bullish standpoint where it could be brought up again, 177.96. So we're looking at the IWM closely. It looks very bullish, like it possibly could retest 180. But, you know, we're going to be looking at it very, very closely. From the one-day perspective to the upside, I am looking for the IWM to break back above 179. If you can get back to 179, I know you possibly can get back to 180. And this time, I'm looking for a push through 180 now. You should have full support there. It should be no resistance till about 182.50 on the upside on the IWM. To the downside, though, you know, if that 180 is your top, because, you know, it took a while to get there. They did hit it, but it got rejected, as you see here. So this is your top. So to the downside levels here, 177.60 doesn't hold tomorrow. I'm looking for a break below at about 175.10 there to the downside on the IWM. And if that doesn't hold, next level should be about 172.40 on the IWM. VIX. Oh, VIX. Oh, VIX, that'll take your chicks quick. So as you see, you guys, volatility has spiked back in the market. Volatility has kicked back in the market. What did they do? I told you 2 days ago, Sunday night, when the candles were here, the volatility you was going to see if it was coming back in the market. You will see candles go above these two candles. And what do you have so far? 1, 2 candles above that mark, above those two candles below, these two bars below. So you see volatility picking back up in the market, and you see how the market sold off today because the volatility was up, the VIX was up, the speed was up. A lot of panic and a lot of fear in the market right now currently. So you've seen how that causes the market to go down when the VIX is up. You saw that today. And like I said, man, it's getting to the point now, you guys. It's really just looking like now to the upside tomorrow. Now I'm looking, if it gets any worse here, you should see the VIX spike. Go ahead and spike to 20 now. If you get to $20 on the VIX, you guys, the market is coming right back down. Then we'll be flipped back to a bear market if the VIX hit 20 tomorrow or anytime soon. So that's what I'm looking out for now. That flip to happen here right now. The bulls are pulling the bears back to their market currently right now by doing this. So I'm looking for, like I said, the VIX to spike to the upside to about $20. And if once it hits there, I'm looking to see if it's going to hold above and stay above 20. Because if so, you'll see a lot of selling pressure. It could be about to fill this candle here over here too in early May. So keep that in mind. But you'll be seeing a lot of selling pressure, a lot of red, a lot of downside on stocks overall if that does hold above 20 to the upside on the VIX. Now to the downside here, we are getting to a point where, all right, this could be a area, as you've been seeing, of support on the VIX. And, you know, you might see the market get a lot of buying back in if the VIX start going back here to about $17.42 here. And even if that doesn't hold in to the downside, I'm looking at next level with $16.94. If you see that, expect a lot of dip buying going on. Expect the market to flip back green and recover all the gains it just recently lost today. And, you know, and that's just what it is on the VIX. Netflix, you guys. Uh-oh. They hit that point, didn't they? They doing it quick, too. I like that. So Netflix, you guys, they hit that point. It found a trampoline. Yeah, I thought the trampoline would be 353. It actually was 354.68. So that's your actual trampoline here. Right here is going to be a wall. I feel like right here, you should get a lot of buying right here on Netflix. Just considering if this was a real move here from 332 to about what 353. If that's a real move, you should get a lot of buying here at this point to push it back up to show that that was a real move. You get what I'm saying now? And you'll actually start to see it start suddenly like this here, and then eventually that will be above this high over here that it just recently touched last Thursday. And we're at Tuesday now going into Wednesday, so we're already back here. So it's already gave half of the gains back. Now, like I said, if you see it basically break below that level, it could be steeping in a little bit more to the buying that took place on Netflix the past 2 days, last week of Wednesday and Thursday. You got to think that was a lot of buying. So it doesn't surprise me that people took profits and they see their profits not going any higher, and so now they're just getting out and taking profits and just trying to find another dip to the point where they feel it's like this again, and then you're gonna see it shoot above this area as you saw this do that. So just keep that in mind. That's what Netflix is pinning up to do. I wouldn't get caught being overly bearish, obviously, unless you can see no debt ceiling deal headlines and more pressure in the market like you saw today. Then you'll expect more downside on Netflix. But I really feel right here, you're going to have the bulls step in at critical support right here, and they're going to buy this thing here. And right here, like I said, from this level where we're at, looking at the end of August going into September, you guys, Netflix could easily be at 400 from this level here. You get a lot of buyers. So just keep that in mind. That's just the long on it. But like I said, I feel like this is your bottom right here. But from the one-day perspective, we do look now that we have came here so sudden. We know now that it can be another bottom, and there is another bottom I'm seeing if possible. So from the one-day perspective to the upside, though, I am looking first here for a break back to 358. You get back to 358, that's where a lot of selling took place. I think that's where support can turn into resistance, and resistance can turn into support. So that's an area right there where the bulls and bears will battle. But I think it can break above there, 358, and retest 360 to the upside. I think that'll show a little bit bullish momentum back at Netflix. That just being the sudden movement there. You break back above 360, the next level to be looking out for obviously would be about 362 right there to 363. But first, you must get to 358 there on Netflix. If not, to the downside, this thing is more selling to do. This thing is bearish here. 353 doesn't hold tomorrow. The next level I am looking out for is about 350 on Netflix. I think that right there, you should have some support step in from that point. But if not, that'll be your turn to let you know the market is flipping bearish if Netflix don't hold 350, because the next level for them would be about 347 to 346 to the downside on Netflix, you guys. So keep that in mind. Microsoft. Oh, Microsoft. So Microsoft, yesterday on the recap, I made somebody said I had made a little bit of an error. I think I said Netflix instead of saying Microsoft when I was talking share prices. But I think I was actually, you misunderstood me. I was actually giving you an example of things and how they work out. But I'll be sure to make sure I say Microsoft today when I'm speaking on Microsoft. So at the end of the day, Microsoft today, you guys, was completely bearish. They sold off today. They hit the levels that I knew that they were going to hit to the downside. Right here, you just got, like I said, too much resistance. To a lot of selling there. It's like a target. It's a target that the market hit, and they hit it, and so of course they're going to get out of there once they see their profit to the point where they made money. That's what this market's about. You making money and things hitting their target. So at the end of the day, you got resistance, got rejected here. It tried to push to 323, but it was just no chance at all today for Microsoft. Just straight downside slide on Microsoft today. Straight downside slide here. Lost about $5 there, almost to that level where I said literally about 314, but it hit 315. So really right here, the Microsoft is at an area, but just like I said, they're still bullish. They lost the bull momentum, obviously, with that downtrend today. But they can easily regain their bullish momentum back here by just showing strength to the upside tomorrow. And the levels I'm looking out for to the upside on the Microsoft is 318. If they can reclaim 318 tomorrow, I'm expecting consolidation there. You might see a push to 319.60 there to the upside on Microsoft. And like I said, that reclaims your bullish momentum. That's really what you want to see. To get back really bullish, obviously now at these points, you want to break it back above the resistance points of the highs where they were at. So 320, then you're completely bullish if you see that break. But I think 318, 319 will be giving them the momentum back at least to the upside if they can regain that. But to the downside, as of now, your top is in at Microsoft. 320 is your top. 322 is your top. There's no upside level, so as of now, so you see more downside pressure here. Look and see if 314 holds or 313 holds, Because I think if that doesn't hold, the next level you're going to be looking at on Microsoft is about 311.40 to the downside on Microsoft. And I think, like I said, Microsoft is a stock where, like I said, they had an earnings with AI. They had an earnings play with AI here. As you can see, since their earnings, they just been going straight up here. So I think a steep pullback is, it might be time for it on Microsoft. Like I said, you really, I was saying yesterday on the recap, I think this is where they misunderstood me. I had said Netflix, but I was meaning to say Microsoft. But Microsoft, a lot of people actually want to buy in at the 300 to 290 level on Microsoft. So if you can get it there, you may see a retest to push back at all-time highs. As of right now, you just might see consolidation to that point. If it doesn't look like it wants to go there, you might even end up seeing it go there, but not going any higher ever again because it might take so long to get it back to 300 and 290. And if it get back that low, people might want to see it back to 280. You never know. And this is the next 3 to 6 months. You got to be thinking now here, where are they going here? They're right here near all-time highs, $20 away, and they're turning around. So not looking good right now. But like I said, the Bulls can easily regain their momentum tomorrow, and that's what we're looking forward to. But if not, if they don't, the Bears got the momentum right now, and all they got to do is flush it to about 311, 312, and then this thing will be looking back bearish, and you can bet your dollar, your bottom dollar, Microsoft is trying to reach 300 again, at least a share, so they can find those buyers that can help them actually go up higher if needed, or if not, it's going to flush below 300. So that's just something to be looking out for long term there. But from the one-day perspective, those are the levels on Microsoft. Morgan Stanley there, last but not least. And like I said, these levels I'll be looking at could be one day perspective, could be next week, could be the week after, could be a month or two from now, could be 6 months from now. I'm just giving you a real time play action of what could possibly happen here. And right here we're on Morgan Stanley here, and as you can see, you guys, I've been telling you the banks, right? This bank, Morgan Stanley was right here. It was at critical support. It's at the brinks of critical support here. If it flushes below this bank look like it may collapse as well, and it's still near it. So we're not too far from where the area was just at, where it may still can collapse. This bank still can collapse. Morgan Stanley still can collapse if there's no debt ceiling deal. And if more people come out to say that there's a lot of pressure still with the banks, and they're holding out on their money, they don't have money to give, then obviously the banks are coming down, and this will be one that collapses because it's already right here at the bottom where it shouldn't be, and it could be about to flush to the point where like I said, it collapses because that's just what a few banks have already done. So at the end of the day, you don't want to panic right here. You're either going to get that collapse, or you're either at this point get the collapse, I think, or you get the whole situation where this thing pops. It pops about a good 5% here, and you see back to the highs of $84, $86 on Morgan Stanley, close to $90, I think, on Morgan Stanley. It can really reclaim these levels back over here. So it's just something to be thinking out for, because like I said, technically we're near the bottom. So if we all know the bank is near the bottom, it's either about to flush or pop. There's no in between with the banks. So that's just what's key here and coming. But right now, it's still looking 50-50. It looks like they're waiting on the overall market data as well. So they closed right here at 82. They did make a pop today to show that they can go back up. So obviously the banks still got money there. And, if they need to put it into the market, they will. Or if they have to, they will. So Morgan Stanley's a good long-term bank, obviously. But, we never know here what bank is really good long-term and what is not when they're at the brinks of the point where they can flush and collapse. So we're looking at Morgan Stanley very closely. And from the one-day perspective here to the upside tomorrow, I'm just looking for a retest back to $83. If you can get back to $83, I know Morgan Stanley now will probably try to make a push here to about $84 to the upside. And then you may see rejection and come back here and consolidate $83.80. But I think that's a possibility there. By the end of the week, next week, they're a pop to about $84, $85 on Morgan Stanley there. But you got to get that break above 83 first. To the downside, though, we know right here where we're at, it just needs to break below to the downside, $81. If that 81 doesn't hold, the next level is 80. And if 80 doesn't hold, you guys, best believe headlines will be picking up on Morgan Stanley saying that they're collapsing here if AD doesn't hold to the downside. So we're looking at Morgan Stanley very, very closely here, looking at the FOMC minutes going into tomorrow, how it's going to pan out. And that is pretty much it here, you guys. That's a wrap. So that's pretty much it, you guys. Bitcoin, crypto, all that, Ethereum's, all that's down, still red. It's just playing in the middle, monkey in the middle with that stuff right now. But that's pretty much it, man. Like I said, earnings plays. I can show you real quick before we leave. Earnings plays. Who reported? This company here reported. I can show you this one here before we leave. This just happened today after the bell. So this was a big earnings move right here. You see they closed at 449. It looks like they closed at 449, but now they're down here at 428. So that's a big sell-off right there. This company right here came down. So we're going to see how that looks tomorrow with the overall market. And PANW right here, they had a little pop to the upside. They closed at 189. Now they're at 197 close. So this was the earnings move they made. So looking good for them. This is a tech stock. Looking good for them if they can hold that tomorrow. And that was pretty much it on the earnings plays. And AutoZone, you guys, I must show you guys that one. That was the market mover today, you guys. Wow. AutoZone had a crazy move yesterday. Or this morning, actually. This was before the bell, so this was actually pre-market. This was a pre-market earnings play, but you see this $2,621 opened up down here at $2,475, and it closed. It really got to an ultimate low of $2,422. So it's down almost 6%, down $156, you guys. Ouch. So that is a big chunk that's taken out of the market right now. AutoZone is giving back. They're basically saying stop coming to our car shops right now. We don't have time to be really fixing y'all cars right now. So y'all need to get in the zone, and we're auto. That's what they're saying right now. We need to get in the zone. Stop spending your money here right now. Stop wasting your money on cars right now because we don't really have the money to fix them. They're going down. They're giving back. But AutoZone is a good long-term stock. Be on the lookout for it to see if it continues this flush, though, because that's a big sell-off for earnings there right there. Big gap right there, as you can see. So just be looking to see if it's coming down a little bit lower, maybe $100 more possibly. That's what you got to be looking out for. If not, this is your new bottom on AutoZone, and it'll recover. So just be looking out for that in the future references. But AutoZone sold out big today, you guys, and that kind of, like I said, chipped the market and got it down 1%. As well as big tech and everything else that happened today to the downside. So we're going to be looking at everything closely tomorrow, you guys, but that's pretty much it. Like I said, man, we'll be looking out for the earnings coming out tomorrow, and we'll have another recap ready for y'all, and y'all stay ready. Like I said, we got more data coming out tomorrow, you guys. Stock futures are slightly higher as investors eye debt ceiling clash in Washington. Republicans question June 1st debt ceiling deadline as talks zero in on potential trade-offs. So that's the latest news right there, you guys. Netflix password sharing crackdown rolls out into the United States. That's what got them down today. It could be more selling with that. That was a piece of data that I was waiting for. A lot of people been waiting for to hear it. They said they hear it. They were actually, Netflix might tank. So be looking at Netflix levels like I told y'all already. Tomorrow I'll be looking at Netflix to see if they're going to hold up that support or you see more selling on that because that's key right there. If you do see more selling, expect it to be the reason why right here. Netflix password sharing crackdown rolls out in the United States. So that's pretty much it right there. Like I said, that's the headlines, and the indices are a little green here, slightly changed, but we'll see what happened in the morning pre-market and when the market open, you guys. But that's it. This was the recap of the SPY QQQ's IWM, DIA, VIX, Netflix, Microsoft, Morgan Stanley with LCAOD. I will see y'all again tomorrow with another recap. Y'all hold it down. Peace.